Good morning and welcome to Market Day Report. I'm Chris Swift. We are going to get into this weekend and see how we're going to wrap up this week of trading. And it's been really interesting. We've seen the corn market, bean market sell off just a little bit. This morning we're just a tiny bit firmer going into the weekend. July up 3/4 at 457 3/4. That sep corn up 3/4 at 468.5. In December, 482 3/4 up 1, and we'll be up and rolling here in just about 14 minutes. Let's see what the bean market is doing. Soybean market is just a little bit softer as well. No, actually firmer. I'm sorry, firmer. July up 1228 1/4. September beans 1209 1/4, up 8.5. And Novi beans back up above 12 at 1207, up 8. 1198 1/4 was the low tick on that. Chicago wheat up 4 1/4 on the July at 667.5. That's where we've seen the most price movement and a lot of volatility in that market. The December contract up 3/2 at 710.5. Kansas City hard red winter wheat, it's a little firmer as well, up 7 on the July at 680 1/4. December up 7, 714 3/4. Minneapolis spring wheat up 4 1/4 on the July at 725 even, and December up 8 1/4 at 753 even. My guest in this morning is Brian Hoops. He is with Midwest Market Solutions. And Brian, good morning to you. Tell me what's on your mind this morning, buddy.
Hey, good morning, sir. I'm just trying to match your energy this morning. Hey, so crop tour, winter wheat crop tour has concluded, and they are finding a yield that's going to be much larger than what the USDA said last week at their supply and demand numbers. So I think you're going to find this type of yields in Oklahoma as well, parts of Texas, Nebraska, Missouri. These yields, I think, are just going to come in much, much larger than what the USDA has said. In fact, while the tour has concluded, 6 out of the last 8 years, their tour numbers have underestimated what the USDA has said. So when we get to the final numbers, I would suspect we're going to be looking at much larger crops as far as the winter wheat numbers go, both in the soft and the hard red. And that means we're going to have bigger supplies. Now, the question will be, can we export it? And I don't know that we're able to at these price levels. We're probably going to have to find a price level much lower to stimulate some better demand. And I know we've rallied here on heavy fund short covering. The funds are probably almost out of all their short positions. Do they really want to go long at this point in time right ahead of harvest? I think the answer is probably no. We'll find out in the Commitment of Traders report this afternoon. So again, if you're a wheat producer, I think you really have to be laying off some risk here at these price levels. We're back at multi-week highs, and so it's really prudent to do something there. Corn and beans, we're really dependent upon the weather forecast. Some of the forecast models taking a little bit of rain out of next week, so we're not looking at 3 to 6 inches, but maybe 2 to 4 for some of the rain events next week. It's certainly going to be getting to a point by next week where producers are going to have to make a decision. Am I going to take plant on the corn? I think the date for Iowa, and I could be wrong, is May 25th, but I think that's the right date as far as making those preventive planting decisions, and it's going to be a hard decision for a lot of producers next week when we get into that rain event.
No, there's no doubt. And I did happen to look the last couple of years. I noted the drought monitors for the last 3 years, and then this time, and boy, it sure seems like we're in really good shape in comparison to the last couple of years. So, Brian, stick around. We're going to go away and take a real quick commercial break. We're coming back to talk cattle. Stay with us. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. Welcome back to Market Day Report. Let's take a look and see how we're going to start this morning. Yesterday was a pretty active day. We saw some good ranges in the cattle market. We closed the June yesterday at 179.02 up 77. The August up 85 at 177.37, and Dece up 72 at 184.55. The feeder cattle market was firmer as well, with the May contract up $1.70, 244.85, with yesterday's feeder cattle index 242.33. So got a little bit of a difference there. Going to have to converge. The August up $1.47, 257.35, and out to the Ock up 127 at 258.95. Hog market, it was higher yesterday as well, up 87 on the June, 98.37. Yesterday's lean hog index was at 91.76. The July up 75 at 101.62, and August up par 80 at 77 even. We get Brian Hoops back in here again. Brian, we saw everything yesterday higher. We saw the boxes higher. We saw the meats higher. but I saw an increase in open interest in the live cattle, and that probably caught my attention the most. Is that new longs coming in or new shorts coming in at the higher price?
And maybe a combination of both, Chris. I do think it might be some of these new longs coming in to this marketplace as we're continuing to work the futures higher. And we're holding a big discount in the futures to the cash markets. Now, we've heard some cash trade overnight, and it's to a private packer, very, very limited. I don't want to take this as, the entire cattle industry is going to be trading 298, but we have heard very limited head at 298, maybe 300 for next week, and that equates to 187, 188 on a live basis. So I know these feedlots are going to be holding out for higher money, and a lot of the trade last week was 184, so they're going to be hoping 186, 187, maybe 188. By the end of the day. And if that happens, you're going to see a big move, I think, in the futures because packer margins back about almost to even money. They're going to give a lot of that back probably on paying cash markets today. But I do think you're going to see something in the futures market, a pretty decent reaction today if we can get that cash trade to develop.
And that's something about the margins. It seems like every sector out there is really having a battle for that margin out there. And we see each one of them moving in a direction that benefits themselves in that. And yet that tends to be detriment to somebody else as we see the packers cut kill. We know that backs cattle up to the cattle feeder there. Anything that you see that might break one of these sectors loose?
Yeah, they are backing up cattle, and they're expected to do that next week. And of course, you have Memorial Day coming in there as a holiday, so you're going to see even further backlogs. That'll help out those packer margins, as we mentioned. But if they're paying higher cash money, it's going to cut into their margins once again. The big thing for producers is they're already increasing weights in here. We're 30 pounds heavier than a year ago. That's a longer term negative for this market. So, when we get these backlogs of cattle and we can't get the marketed because the packers are cutting kills, it really hurts us in the long run. So you really have to pay attention to your marketings. If we get big rallies, go ahead and lay off some risk on those big moves in the markets.
Absolutely. And I think April's cattle on feed report will be important, but I think when we get to see what this month does in June will be more. That'll help us kind of because we are in a demand segment, and every month that goes by, we know we're going to have lesser and lesser cattle out there. So, Brian, really do appreciate you taking the time to be with us. Hope you have a safe weekend, as Brian Hoops is with Midwest Market Solutions. And Suzanne, good morning to you.
Happy Friday to you.
Absolutely.
It is going to be an interesting day. Never boring when it comes to these markets.
It's always something fun to watch out for.
Thank you, Chris. Appreciate it.